Why would Patrick Collision send an email to two random dudes sitting out of Bangalore? We were almost out of cash. We probably had lost $500 with us.
Why would you say that? Stripe was able to understand the scale and the product complexity that you were solving, but none of the VCs were.
Product discovery was extremely difficult because when we used to go to the customers, our customers will right away say on our face that this is something which they don't want. And when I used to go to investor, they would be like, this is probably one of the most stupid things which you have ever heard. Myntra reached out to us. They actually gave us our first chance. They told us that we have tried almost every consultant, every engineer, every big four, and nobody has been able to solve our problem. It was our best case because if we are able to solve this problem for them and make this one customer happy, everything is going to fall in place. We used to start at 8 a.m. and it used to go till 2 a.m. continuously for 4-5 months.
This is a very important milestone, the largest acquisition and the only acquisition for Stripe in India. Hi, this is Siddharth Aluwalia, your host at Neon Show and also managing partner at Neon Fund, a fund that invests in the best of enterprise software companies that start from India and build for the globe. Today, I have with me Saurabh, founder of Reco. Saurabh, you have a very interesting journey. Welcome to the podcast, first of all.
Thanks, Ed.
You built Reco into one of the leading financial reconciliation platforms from India, used by finance team at Deliveroo, Myntra, Meesho to track the revenue. And within 3.5 years, I think this would be one of the first companies from India to get acquired for $150 million, and that too by a global giant like Stripe. So congratulations on the journey.
Thanks, Ed. Thank you.
Right, and such a fantastic example for founders from India, right? So I want to start in reverse, right? How did the acquisition with Stripe happen?
I think during that time, we were actually in the process of raising a Series B round. And we were having, I think, conversations with a bunch of VC firm, right? So during that time, I think on one of the weekends, me and Prashant were just doing our regular things. And all of a sudden, I received an email from Patrick where...
Patrick Collison, founder of Stripe.
Yes. So, and I think initially I was a little bit confused. I think both me and Prashant were confused.
Did you check the email was genuine?
Oh, yes, we did. And I think both of us were very confused because we were like, we have never interacted with Stripe. We possibly don't know anybody from Stripe. We have never worked with Stripe. So why would Patrick Collision send an email to two random dudes sitting out of Bangalore?
Yeah.
But then I think we responded to it, and then things moved really fast. Right? So immediately, I think Patrick introduced us to John, and next day, we were on a call with him. So they quickly, I think, moved fast and essentially came back to us that they would be keen on, say, investing in a round. Right? So that is how it kind of happened. But how they got to know about us and what was the thing which triggered the reach out, so that is still something which is mystery for us.
You have never asked a Patrick on...
we have never asked them, right? But I'm sure, I'm a little bit unsure how it happened, but I'm glad it happened. And I think, then after a couple of conversations, right? So we went ahead with our Series B round where Stripe was leading it. But during that time, we started engaging more with the Stripe team. And I think after close about, say, a month of deliberation, right? So the Stripe team came back and the Stripe team said that, look, we would be... we are interested in working very closely with you guys, right? And I think at that point of time, I was like, you guys are already equity investors. So how much more closer do you want? Right? But I think then the team said that at that point of time, it makes a lot of sense for essentially us and Stripe to work together. And they are keen on acquiring the whole company.
Got it. And now I want to come back to the journey because this is a very important milestone, right, in your journey, in Reco's journey. And obviously, right, is the largest acquisition and the only acquisition for Stripe in India,
right,
till now. So you guys have really put, like, for example, India on the map. Like one of our portfolio founders, Kumar, he started Slang Labs. So his first company was Facebook or Meta's first acquisition. Little Eye Labs
Right.
was the first acquisition by Facebook and Meta, right? So I think these incidences, these acquisitions, put India on the global map. That yeah, the quality of software that we produce can be better than anybody else globally.
Right.
So coming back to the point, how did Reco get started? Right, all the things around your thesis, building the team.
Right. Understood, Sid. And Sid, I think that's a really important question. Because I think there are generally multiple ways, or I feel like there are possibly two ways in which people try to start company, right? So I think the first way is where people try out multiple things, and I think the second way is where generally you have some kind of an opinion on a domain, and then you just want to go a little bit all out on that,
Yeah.
right? So in case of me and Prashant, both of us were part of some very fast growing B2C companies in India. And primarily, we were working on the post-checkout side. So that is a place where you see a lot of complexity. So one of the things which I was seeing during my time at Flipkart, that on the consumer side, we had so many payment gateways which were being used for processing the payments. And then we had a lot of merchants on the other side of the marketplace where you deduct the fees and then essentially you do the payouts. But at any point of time, if you have to ask someone this question, that what is my cash position, it's very, very difficult to figure it out. The other thing is that payments were also becoming complex at that point of time, right? So where a consumer can actually pay for a card using, say, a debit card, credit card, loyalty points, and then this product can be exchanged over a period of, say, 30 days. And this 30-day window can fall over 2 months. So things were becoming extremely challenging and complex for the finance team. And all they had at their disposal was an Excel sheet. So I was seeing a lot of time when something like this was breaking apart. But it was more like, just an observation that something is breaking, it's not working, people are actually staying up till, say, 5 a.m. or say 6 a.m. and still it's very difficult to answer this question that have we received the right money, have we received at the right time, and whether the money which we have received is it with the right charges or not, right? So just 3 questions were extremely difficult to answer. When I moved to my next company, Blinkit, I was again working very closely with the finance team, and we had a very similar kind of problem. So where tracking cash was extremely difficult, right? So I feel a bunch of these experiences, gave me some kind of intuition that looks like there's something which is broken. There could be some value in it, but how to build a product, how to monetize it, how to sell these things, those were some things which were very unclear, right? But with this intuition and with this single thought that there could be some value over here, I was just ready to go and explore this field a bit more further. My co-founder Prashant was with Jio, and I think he was also facing some very difficult, or facing some very similar challenges over there because they had to provide settlement data to a lot of their merchants, and just making sense out of that settlement data was extremely challenging and very, very difficult, right? So both of us started contemplating on some solutions. Initially, I think it was very unclear. I think our initial thought was to build maybe a cheaper version of Oracle, because we thought that maybe that is the right shape of solution. But then I think very quickly we realized over, say, 2 or 3 months that you need at least 50 engineers working in a cave for next 2 or 3 years to build something even very close to it right over there. And we did not have any capital. We did not have also the expertise.
And this is which year?
This is actually 2017.
Got it. So 2017 is when you quit your job. So then...
Yeah. So in 2017, I quit my job, and then essentially we started the company around some of these ideas, right? So initially it was more playing around and figuring out what is it that we should build, and that was also the time where I think generally people were also trying to go more into spaces which were existing categories. And I think the general approach was to introduce some kind of a cost arbitrage and go in and play into those categories, right? In case of us, it was slightly different. So we did not have, I think, any example in the market. So it was very difficult to, figure out that
Yeah.
what could be your base product shape, or what could be the first starting point. And I think the most funny thing which I remember from that day, I think those times, was that product discovery was extremely difficult, because when we used to go to the customers, our customers will right away say on our face that this is something which they don't want. And when I used to go to investor, they would be like, this is probably one of the most stupid thing which you have ever heard. So maybe you guys should go and do something useful with our life. And both me and Prashant were scratching our head, because I think in the hindsight it's a little bit more easier to
Yeah.
say that you were contrarian and essentially you went down a certain path with a lot of conviction.
When you're living it, it sucks to be a contrarian that time.
Yeah, that's actually true, right? So because you really don't know whether whether you're hallucinating or there's some value in that, right? So it's only in the hindsight, then you try to rationalize it. But I think at that point of time, it's very confusing. But I think you try to hold on to some threads where you feel that looks like it's not totally worthless, but looks like there are some things which are making sense. And then I think it also becomes a little bit more about how much you're just ready to bet on yourself. So I think for us, the breaking point was that either if we are totally out of cash, so we'll have to stop because we can't pay for the servers.
Yeah.
And so I think that was the only end point which we had kept, right? I think worst case, you go back to your friends with zero savings and crash on a couch, and then probably figure out something else to do. But yeah, I think that was the worst case scenario which we had.
So what was the first validation for your idea that, hey, somebody wants this?
Yeah. So I think in our case, there was very less validation. There was very, very less validation, right, over there, because sometimes you hear some good things from your customer and that keeps you going. But in our case, our customer was directly telling on our face that we don't need it, just don't show your face again over here, right? And and especially I think when you're trying to sell to finance, you also get very small windows, because they have closing cycles, they have taxation deadlines, etc. So they have a lot going on at their side. So you'll have like a very small window, but very quickly the months will pass by, right? And you realize that whether I should keep going or whether I should stop, right, over there. So we almost had very less validation, but in general, I think we came across one or two finance controllers who were just very encouraging. And I was like, there's some hope. Let's just keep doing what we are doing right over there. And like this, we almost ran for a year, and then I think in the December of 2017, right? So we were almost out of cash, right? So we probably had lost $500 with us. Prashant was already out of cash, so I think I was like, this is the last $500 which we have, and if we are out of it, we have to just go back and probably do something else, right? But at that point of time, Myntra reached out to us.
Inbound.
And, excuse me?
It was an inbound.
Yeah. So Myntra reached out to us, and Myntra, they told us that, look, guys, we have some problem on the reconciliation side. We have tried almost every consultant, every engineer, every big four, and nobody has been able to solve our problem. Me and Prashant were so low on confidence at that point of time. We were like, what gives you the confidence that we can solve your problem? Yeah. We haven't done anything worthwhile during our last 1 year. and doesn't look like I think the future is bright for us, right? So, but I think at some point of time, in the hindsight, I feel, uh, they actually gave us our first chance, where I think they still, trusted a 2-member team and gave us this chance that, guys, at least give it a shot and let's see how it goes, right? For us, it was our best case, because we were like, that in case if we are able to solve this problem for them and make this one customer happy, everything is going to fall in place right over there. And then we worked with Myntra for almost like 3-4 years, very intensely. 3-4 months, sorry. 3-4 months very intensely. We used to, I think, probably start at 8 a.m. and it used to go till, I think, 2 a.m. continuously for, I think, 4-5 months. Both me and Prashant lost a lot of weight during that time. But we were able to, solve that problem to a very, very large extent. And I think, that gave us, that let us earn our right to essentially build this product for the finance team. And once I think that happened, right, during that time I was meeting Sanjay, and Sanjay was still, I think, scratching his head, and he was like, it looks like there's something interesting which you guys are doing, and since this customer is there, so probably I think let me invest in this round and see how this thing goes, right? So that is how a seed round happened at point of time. And for next 1 year, we were just running Myntra, because the loads were just so high that no matter how much you build, everything you will just break down, right? And
when you started with Myntra, how much they were paying annually, and after 1 year, how much they were paying annually?
Sure. So this was more of a usage-based pricing which we had, and it was slightly north of, say, 200K, which we had as our initial contract, and then it just went beyond it because the company was scaling and it was on the usage basis, right? But it was also very challenging to service them because the scale was extremely high. And
how much orders would they be serving per month that you would reconcile?
I can't exactly talk about the orders part, but essentially,
or transactions.
But essentially at a row item level, right? So because the amount in a cart also gets distributed to individual items which are there, right? So at a row item level, it was a few hundreds of millions of rows which we're trying to reconcile.
Okay.
And
all in Excel sheets.
No, this was something which was now inside the system. But the challenge is generally, working with finance teams is that sometimes the data will come to you on t equals to 0, and you have to give out the results on t plus 2. But you also have to ingest that data. You also have to process that data. You also have to compare that data. It takes time, right? And when you're trying to do, I think, some of these things in memory, it also takes very massive amount of RAMs.
Yeah.
So I think I remember one instance where essentially we were looking for 1 terabyte machines, and I don't think anybody uses it. Nobody uses it, right? There was once, I think, when Ola was using it for their peaks, if I remember right. But nobody uses those machines. Those machines were extremely costly. So I think we went to Microsoft, and these guys were like, guys, we don't have those machines, right? But somehow I think we were able to manage it out. But I think the load profile was just something which was very difficult to manage right over there. And then I think, but it also gave us a lot of inputs that looks like this is the kind of load profile which you can expect from finance teams at multiple places. So somehow your system should be able to support that right over there. And maybe over the period of time you start modifying the behavior, but this could be the starting point.
So for Stripe, it was a product acquisition, a scale acquisition, or a team acquisition?
It was a combination of product and team and business, I guess.
Okay.
Because over here, essentially, if you look at Stripe, right? So Stripe is a very large payments business, but very adjacent to payments, you also have finance, because because finance is constantly using the data which is being generated by payments to do their reporting, to do their tax calculation, to do multiple financial operations things, right? So over there, so it's generally one of the adjacencies, right? And constantly, I believe Stripe was getting a lot of feedback from their payment users, from their finance users, that can do something for us, right, over there. So at a broad level, I think Stripe really understood that looks like there's a lot of value which exists over here. So essentially what we had built, and the kind of domain, very specific domain knowledge which the team was bringing in, it was extremely valuable for Stripe, right, over there. And I think at that point of time, both of us saw the value in essentially working together, where we get access to a very large customer base, where there is a high amount of trust which exists with the customer, and where you can build and sell these products by combining it with the payment offering. So that is where it just became something which is very complementary. And I think that is the reason where I feel Stripe.
What I also observe from this conversation is that maybe because you were processing just 100 million rows for Myntra, for across all your customers, by the time you got an offer from Stripe, there might be billions of.
Yeah, so scale was pretty high, and but somehow I felt, the thing which resonated most with the Stripe team was around how the product was built, and I think the thoughts which were around, say, product building, and were a lot more mature. I also feel, we were never, very amazing product builders, but I feel, once we went through, I think 5 or 6 iteration, you learn a lot of things, right, over there. So I think that experience was extremely valuable, which Stripe recognized at that point of time, right? So, and then I also feel in each and every of our fundraising, our customers were extremely happy with what we were doing right over there. So they supported us throughout our fundraisers, our acquisition, because one part of your acquisition diligence is also speaking to customers. And I think I still feel a lot of gratitude towards my customers, where they were just kind enough to talk about us in a very excited
usually
way.
Enterprise are not open to talk about.
Yeah. So, but I think they were just very kind enough, and I think in all the conversation, I feel customer voice is the loudest voice in the room. So I think that was something which resonated a lot with Stripe. And then I think essentially
So it was essentially you were at 2 million kind of a revenue when Stripe offered the acquisition, and it was like a 75x revenue multiple. And what I understand from you is that it was a product built with right abstractions, right conceptual model. You had a unique point of view on the domain, which was, I think, not available anywhere else, and customers who were very gung-ho about you.
Yeah.
So these were all the ingredients for Stripe to.
That's true.
To make that step.
That is true. I think we also felt that somehow I think there was a lot of resoluteness and trust which we had built with the customer. So generally, when you look at the reconciliation problem, right, it's generally a very tough problem to solve. Because you have to very quickly understand whole companies systems, and sometimes these payment flows could be extremely complex, right? But I think we had built a reputation that somehow I think if you're working with these guys, they will figure things out over there. And over the period of time, this reputation also gets I think gets known more in the market. So sometimes I think one of your customer might be moving from, say, one org to another org, right? And they bring you in the new org right over there. So I feel that message in the market, that essentially they can solve your problem, right, over there, I think it resonated, just very well, I think, with a lot of customers. I think at some point of time, I think as the market warmed up, I remember, I think there was just so much of inbound which was coming in. But we were just not able to,
From customers.
from customers, right? We had to just turn down so many of them because we were just not onboarding any new customers, right, at that point of time.
So why would you say that, that like Stripe was able to understand the scale, the magnitude, and the product complexity that you were solving, but none of the VCs were like?
Yeah, I mean, yeah, I think it was a bit challenging, I think, at that point of time, right? So I remember, I think when we were fundraising, it was extremely difficult for us to probably make our case that why this company should get funded. But essentially, I also realized, I mean, at that point of time in 2017, 2018, right? So we did not have a lot of people who were, I think, investing in B2B side. So we had, I mean, we did have some people, but I still feel, I think the number of people was less. I think that was the first thing. The second thing which I also feel was that back office was unsexy. It's still very unsexy.
Yeah.
But essentially, I think generally people get attracted more towards things which they can see. But I think but the thing which you're doing, it was just so much in the back office where probably you would have never gone into these tangents, right? So I think that was the second reason why people were just not very people just could not relate to it.
Yeah.
I think the third one was also around that there was in general an idea which people had that that companies should very quickly go into a hockey stick kind of a growth path. But I think now in the hindsight, I feel when you're building an enterprise company, there's generally a gestation period. There's generally a period which is required to build the product in the right way, and essentially, I mean, some domains can have a longer gestation cycle, right? So, but that was something which was, I think, which was something which people were not resonating with at that point of time, right? So I felt, I mean, these were some of the things which were, which essentially making it very difficult for us to raise any fund at that point of time. And I think the other thing is that, I mean, in some cases where I think a few VCs also tried speaking to the customer, but the customer would be like, hey, I mean, we don't have this problem, right? So, and maybe I think what these guys are doing, it's stupid, right? So, which is where I think there was not a lot of excitement at that point of time, right? I think there's probably, I think, one more thing which I would also add is that majority of the companies which are getting funded, right? So these were also operating in existing categories where you had some benchmarks and you had some reference points. But in our case, it was a new category which we're opening. There's nothing which exists in the financial operations, and we did not have any examples of that over there. So I think that was the place where I think it was just becoming very uncomfortable for anyone to come and invest their money.
Yeah. Also see that because we haven't seen many successes in the B2B space in India, right? Yeah. What usually happens is, because let's say Freshworks, like, because though it's the private company and never raise money, so people can't relate to it very closely. But Freshworks, many investors were part of the journey, seen the company's success. So people started replicating that playbook that, hey, we want more companies which can be like the Freshworks, the NS Freshworks from India. So it's difficult for them to reimagine any other category that succeeds.
That is true. India. That is true. Instead, I think, I mean, like, since we're talking about, I think a bit more on, say, how we look at, say, cost arbitrage in existing categories, right? I feel I feel the amount of over indexing which I think the ecosystem has done on, say, some of those models, right? And I think it has somehow been extremely detrimental, because the challenge is that, I mean, when you start broadcasting a lot of those things out there, I think people start realizing that maybe this is the right way of building the company, where we have to go really, really marketing first, right, over there. But in more cases than not, what we have seen is that essentially you need to start with a good product. You need to start with a good product which is providing sufficient value to the customer, right? And then essentially figure out a way of distributing it to more and more number of people. But somehow I think the conversation was getting started that how do we build the distribution, or how do we introduce a cost arbitrage, right? Because the thing is that, I mean, you will definitely have some customers, right? So which will be buying you. But the thing is that at some point of time, if you have to go up market, or if you have to support, say, a breadth of customers which are small, which are medium, which are, say, large size, right, over there, and where you have to keep product superiority and essentially technological superiority, right? So you have to build products in such a way, and then the way your product is built and the way you're catering to the market, it also starts getting reflected in your public company valuations over there. So there are, say, some companies which have been run for multiple decades and are still at a $1 billion kind of valuation. But I think, I mean, somehow when you're competing globally, I feel the ambition should be a lot more. And to essentially suffice that ambition, you have to build your product or think about product in such a way where you're competing with the best in the market. Otherwise, I mean, you're not going to command very good public valuation.
Who are you competing against when you started globally? Any?
Surprisingly, I mean, we were not competing against anyone. We were actually competing against Excel at that point of time, right? So there were only two companies which are talking about reconciliation in 2017, I think. There's a company called Modern Treasury in US, and the other way us, right, over there. But I remember, I think, post Reco's acquisition by Stripe, I think there are just too many companies now over there. I still feel that the product shape and needs to be in a certain way in case if somebody wants to win this market. Currently, we are seeing people building some things in the silos here and there, right? Which I just don't think is the right product strategy.
And you and Prashant were also early angels and mentors to Anand at PinkSafe, right?
Yeah.
And you played a key role in the acquisition of PinkSafe by a public company, SentinelOne, which was again like the PinkSafe was a $2 million revenue and the company was acquired for $100 million, right? So what are the common themes that now you have been part of two major acquisitions, right? That you can say, because these two have been like, if not the largest, but some of the largest acquisitions from India.
So I think, first of all, in case of PinkSafe, Anand is a very amazing founder, and I think the way I think he ran the whole M&A process, right? So I think it was very mature, fair, and thoughtful for towards all the stakeholders. So I think, full credits to him, how he did that. Me and Prashant were extremely lucky to be one of the earliest check in PinkSafe, because we also happened to be the first customer of PinkSafe. So before that, Anand was working on some of the
and this was which year when you invested?
This would be, I guess, 22.
Okay.
22, right? And then during the course of company building, I think we had some of our learnings from Reco and Stripe days, because somehow I think a lot of challenges were very similar, because it was a security company. A lot of people were able to understanding what they were doing. And we were able to just sometimes pass on some of our learnings that we went through something similar. So just keep going on this path, and till the time you have happy customers, that is the thing which you need to optimize for. So I think when essentially there was when the interest around the acquisition came in, somehow it was a lot more very similar in nature. In terms of how it was for us, and I think me and Prashant, both of us shared a lot of learnings from our experience, and then I think I did feel it really helped. I think Anand in essentially making sure that the process was a lot more mature, and it was.
And what do you mean by mature? Like, can you give some examples of it?
So generally, I feel when I say mature, I'm also trying to find, say, some right words to characterize it. Is that acquisitions are also a little bit more challenging, because as a founder, you are at a point where you have very less number of people from whom you can borrow their learnings. Like in case of us, we had a friend who gave us some advice, but apart from that, we did not have anyone.
Yeah.
And the second thing is that it's also a place where you have to manage a lot of expectations. You have investors, you have employees, and essentially at multiple places the interest also diverge, the incentives also diverge for people, right? But during that incentive, still you have to carry or you have to bring together your employees, you have to bring together your lawyers, you have to bring together your investors, and still take them in a certain direction along with the buyer, right, over there. The challenge is that you have very limited communication to achieve that, because you also can't talk about it openly.
Yeah.
And but still, I think somehow you have to assure people, keep the communication in silo, that guys, we are going through
the communication
something.
Can only between max 4 to 5 people. It can't go outside that small room.
That's true, right? So in case of us, in case of us, if you see, it was primarily between, say, us and 2 board members.
Yeah.
Just that. And I think I had specifically requested them to keep it in a very, very close loop over there. But I think there are just so many things which are going in your head, and it's very difficult to sometimes do something which in the spur of the moment, right? So which can just move things in a certain way, right? So you need, I think, a lot of personal balance and anchoring to keep moving things a little bit ahead. And it's massive amount of work. Right? For me, I think it was almost like 6 months of just sitting inside one room. And I think my employees were like, where is this guy? We just can't see him, right? And Prashant was running the show.
So the acquisition process took 6 months,
Yeah.
end to end.
Yeah. So essentially, the diligence is almost very extreme.
3 months kind of diligence.
It easily takes like 4 months.
Okay.
And it generally starts from the point where you have incorporated the company.
So where was your incorporation?
So our incorporation was in US, and we also had an India entity. But essentially, you go through every single thing, which you have done over the period of, your whole company. There are some buyers which are even more diligent, right, over there. So essentially it becomes, I think, just a lot of work, right? And that it's a massive amount of work which you have to consume. And I think the thing which you keep in your mind, that there is light at the end of the tunnel. I think this was a thing which I used to just keep hearing, that just keep going, because there's light at the end of the tunnel. Keep going over there, right? So but I mean, as a founder, you haven't been exposed to it, right? So generally, I think during the process, then you build a lot more muscle. And I think once you have gone through it, you pass on some of these learnings. Where I think the most important point is how to keep everybody together, right? Because if an acquisition is happening, your employees are leaving, or say, if say investor starts, putting in say some very unusual clauses, right, or etc. etc. I mean, all of those things can happen, right? And sometimes I think I also feel people become a little bit more I think indexed on not leaving any money on the table, right, over there.
Yeah, I think this is very particular. So you want to squeeze the last drop from the
Yeah.
acquisition.
So, but sometimes I feel it's much more important to, I think, trade some amount for relationships over there, because it's not the only time when you're going to work with each other. But I think there would be multiple occasions where you're going to work with each other.
Can you also speak about pricing the acquisition? Like how did the pricing journey move?
Oh, sure. So generally, I think the way I think some of these things happen, right? It's a little bit like this, right? So the first offer which you get would be around say 3x or 4x your last valuation,
Yeah.
right? Over there. So that is where it starts, right? So, but essentially, most of the acquirers, they have a certain budget which they have, right? And there's an upper cap which all the acquirers have, that they can essentially go up till this level, right? So there's a lot more room for negotiation from say 3x, right? But it also depends a lot on say what you're bringing to the table, right? If the product is not built in the right way. So I mean, I have a lot of examples of companies where generally, I mean, they go at a say 3x or a 4x kind of a revenue multiple, right? Where essentially I mean, the product did not have much strength, right, over there. But essentially, if you're bringing say something which is very specific, very unique, and very condensed to the table, and it's reflected in your product, it's reflected in say your hiring, it's reflected in the human capital, and it's also coming from your customer side, right? So then you can go a lot more higher as compared to say a 3x or a 4x.
You also mentioned in the offline conversation that the Collison brothers are some of the best communicators that you have seen.
Yeah.
Right? Can you share some stories, some examples on that, and how it reflects in the entire company?
I mean, it's a little bit like that there's a huge amount of I think indexing which is towards writing things, and I think, I mean, generally the writing culture is like extremely heavy inside Stripe, right? So but it does two things, right? First one is it I think helps people think and helps collaborate async. The second thing is that, and I mean, if you have said something which is verbal, right, it gets lost after that communication, right? But if you have written it down, it can be referred to by multiple people at a multiple point of time, right? So I feel, I mean, these are say some things which really help. But I think apart from that, I feel both Patrick and John have built a culture where people are very detail oriented, and it gets reflected in the documents. It gets reflected around say when people are thinking through problems and drafting out solutions, right? So I think that becomes a little bit unique to the company.
So one thing, like how US technology companies look at product acquisition,
Yeah,
is very different than how products get acquired in India.
right.
Can you emphasize more on that?
Oh, sure. So generally, I think, I mean, whenever you you see some of these product acquisitions, right? So these are specifically looked at from a lens of something called as product acceleration, where you're saying that, look, I mean, if I have to build something like this, it's going to take me probably say 3 years period of time, and then do I have the right expertise for it? Do I have the right domain knowledge for it? How many chances that I would be landing the right product shape, right? So you try to reduce a lot of these risks by acquiring a company which has already gone through this phase. and where you are able to see, I think, the initial spikes of product market fit, and then you go ahead and essentially, make a case to these companies that we should work together, right? So conceptually, I think that is where it starts with, right? Before that, the reason why say this specific product becomes relevant is because, I mean, generally larger companies, you're not selling product in silo, but you're selling a suite. And when you're selling a suite, you always have to make sure that your suite in capability is essentially comparable to some other company's suite also, right? In case if you're not, then in a lot of cases you'll be losing on the sales side, right? Because somebody would be saying that, hey, I have this these 5 or 6 products, they work very tightly together, they're interoperable, and essentially we would be able to take care of all of your things right over there. And then imagine, say, another competitor which say that, hey, I have 2 or 3 products essentially, and I don't have the remaining, say, 3 or 4 capabilities with me, right? So in most of the cases, I mean, they're going to lose, right? So generally, people try to compete a lot with each other on the product capability and product suite side. So if they are seeing a gap, they will start evaluating whether they should build it inside or outside. And in case if the evaluation is this, that, I mean, we need to get this thing from outside, then they start scouting for companies, right? And when they're scouting for companies, right, so then there are, say, a few things which become, say, critical. One is what is the valuation which this company has. In case if the valuations are very high, I mean, you might still not go for it. How is the founder profile? Is the founder a lot more, say, marketing or, say, business indexed, or, say, these are very technical product oriented founders? Generally, I think technical and product oriented founders are more popular in, say, this bracket of acquisition, which is say somewhere around, say, 100 to 300 mil kind of a thing, right? Then, I mean, you look at, say, company culture. So if the company hiring culture, etc., are somehow matching, say, the kind of company or, say, the buyer right over there, so that becomes a little bit more easy to absorb the company at a later point. I think absorb the company human capital along with, say, the one which is currently existing. So primarily, I think these 3 or 4 things, I mean, which becomes, say, part of the evaluation.
So Stripe acquisition of Reco was a product suite completion in the CFO stack or a product acceleration?
I mean, every acquisition is an acceleration.
Yeah.
But essentially, the acceleration, the reason why it happens is because you want to complete a product suite, right? Or you want to add one more thing in the product suite,
Yeah.
I would say, right? And it's something, I mean, which your customers are asking. But internally, if you try to build it, it might take you a long time, right? And then similarly, in a lot of cases, I think it does not fly out in case of, say, larger companies to ship out, say, some new product. Generally because, I mean, the domain expertise is sometimes less, or, say, the -1 to 0 journeys are also a little bit difficult to, I think, pursue inside larger organizations, because you have a lot of constraints under which you work, right? So oftentimes, I mean, if you have to just underwrite the technology risk, or, say, remove the technology risk, it's much more better to acquire company as compared to say try to build it, say, inside.
And one important factor that I want to discuss is, like, Indian companies are always talking about ARR in
Yeah.
B2B space.
Yeah.
And even when Indian companies acquire other Indian companies, ARR becomes the bottom line
Yeah,
metric, because essentially we are a very new ecosystem in B2B acquisition.
Yeah,
Even
yeah.
B2C, nothing has happened
Right.
except Flipkart, Myntra, and a few like Flipkart PhonePe deals. And so why ARR at early stages is not the right metric to measure the product or the company.
Yeah. I think I'm going to get a lot of flake for this, but generally I feel that it's something like this, right? So I'm going to reason it something like this, right? In a venture, I mean, if you're investing in a company, right, so somehow you're investing in a company because you feel that it's going to become, say, $100 million company, right? Over there. Now, I mean, if you sit at a point of, say, 100 mil, and if you look back, I mean, you will not find, say, a lot of meaning in, say, initial 1 or 2 mil, right? So at that point of time, I mean, what you're essentially looking for, that what are the right signals which I can have and which can give me enough validation
Yeah.
and comfort that this is going to be $100 million company, right, over there. And I think more than revenue, what I would more index on is product shape and product usage, because your revenue is your lagging metric, right? Sometimes you can have a lot of revenue, right? But maybe you might, just cap out at like 5 or 6 mil, right over there. And we have a lot of companies which are around that. So I think the place where I generally try to, I think, now index more on is your product shape needs to resonate very well with the customer and essentially its business process. You should be able to fit in very, very well, right? And that gets reflected in essentially your usage. So if the usage is high, you can always put a price to it over there. So I think what I would index a lot more, or what I would ask an early stage company or a seed stage company, is how's the usage of the product, right? How many people are using it? How many times are using it? How many times they're downloading reports, right?
Yeah.
Right. So those are the things which would be more strong signals to me, because your pricing can change, right? I remember at some point of time we were charging X pricing. At some later point of time we were also charging 3X pricing, right, over there. In some cases you might also charge a lesser price, right, over there. So I feel, I mean, it's a lot more important to index specifically on the usage part. And maybe I think a ARR question in the early stage might not be the right question. I mean, once you are confident on your product shape, right, so then you can talk a little bit more about that. How do I accelerate the revenue? Where you work on your pricing, where you work on your packaging, right? But the initial days are more about, how do I essentially, figure out a product which is creating enough value for the customer, right, and which is getting enough customer love, right? And I think we have a lot of stories where people have actually passed on companies because, I mean, the ARR was low, right? But probably I think I will just index a lot more on the usage front, right?
Any other metrics to measure the product except usage on the quality of the product?
I think the second thing is that, I mean, you also evaluate how critical is the business workflow, right? Because sometimes, I mean, your sales might be difficult, right? And you might end up, essentially passing on the company, right? But you also realize sales is difficult, but even, throwing these guys out of the company is also difficult, right? So it's difficult for you to enter the organization, but it's almost impossible for you to get out of the organization, right? Like if you take the case of, say, ERP companies, they are probably, those kind of companies which run at, say, minus 99 NPS, right? But nobody is able to throw them out of the organizations, right? And one of the reasons being is they are just responsible for such critical workflows, and the whole cost of moving is just so much that nobody touches it, right? So I feel, I mean, you have to evaluate like how critical it is for the organization, how high the usage is, right, over there. And I think the most important part is how much customer love it's getting, right, over there. I remember, I think sometimes I think it does not become visible in the first conversation, but I think as you have more conversation and people remove their guards, right, over there, I think they become much more open to the idea of sharing how actually things are. And it happens a lot I think on the finance side, where initially people would be telling you in the first conversation that everything is, just absolutely kick-ass and chaka-chak, right? But I think by the third conversation, they would be like, everything is in fire. Can you, solve these 200 more problems for us, right? And then somehow you have to, build that trust, build that comfort level, and reach up till that stage. And I think once you are at that stage, I think people start giving you actual feedback, right? I think one of the things which I saw during Reco time, right? So, because I think early on we discussed that, I mean, how do you essentially find out the sparks that you're still going in the right direction? So one of the things which was there, so when we were solving this problem for Myntra, we used to be awake till 4 a.m. and it was just not us. I mean, their team was also awake, right? and me and Prashant, we're like, I mean, we don't have anything else to do in our life, so we are very fine with being awake at like 4 a.m. But if these guys are also awake at 4 a.m. and they have families to go back to,
Yeah.
right? Must be a really important problem for them, right? So that is how, I mean, you start learning more and more about them, that why something is important, right? And especially in the new markets, I also feel where you don't have benchmarks, right?
Yeah.
Right. So I mean, it also gives you a lot of pricing power right over there. Like in our case, I think we were probably the only ones, I mean, who were able to process such high amount of load and essentially work with our customers. And I think that also gives you a lot more leverage, I mean, in the pricing conversations, right? So at some places, I mean, we did not go ahead in a few places because the customer was asking for a cheaper price, right? But we were knowing that, I mean, even if you try using Excel or something else, etc., that's going to break. And at least during that period of time, we did not have anyone who was able to provide similar kind of service levels, right? So but I think we digress a little bit, but essentially the usage and how critical that thing is for the end
it
customer.
clearly shows if the finance team at Myntra was awake at 4 a.m. it was like hair on fire problem.
Oh yeah.
I often wonder, right, after Reco and PingSafe, there haven't been that size of acquisition from Neon portfolio.
Yeah.
The companies ZenDuty got acquired recently, Requestly got acquired, Logic got acquired, right? There are a couple of more acquisitions from our portfolio, right? But not at 100 mil plus scale.
Yeah.
So why do you think was that a ZERP phenomena that 100 million plus acquisitions were happening because there was cash in the ecosystem overall, or not enough great quality Indian products in B2B space are produced that global players are willing to offer?
Yeah. So I think, I mean, I would probably say, I mean, it's 100 mil to 200 mil, it's still a lesser amount,
Okay.
I would say, right? And the reason why I say so is because instead of say benchmarking against say some of the Indian buyers, right? So I would benchmark it more against.
I'm talking only about US buyers.
Yeah. So I think I would say, I mean, I would benchmark ourselves against more with say Israeli companies,
Sure.
right? And I think I've seen more examples where I think the Indian companies are say somewhat similar ARR. In multiple cases, product is much, I think, better, but I think the valuations are say lesser. All right. So I feel, I mean, at certain places, I think till the time I think there is more product strength and it gets reflected. I feel, I mean, and there is enough thickness in the product layer, right? So what I mean by that, I mean, if the product layer is very thin, very, very thin, right, over there, and if there's something which is not say very, very specific domain knowledge, right, and which can be built by say some another group of people, right? So that gives you say lesser leverage in say the acquisition side.
Yeah.
But if the domain knowledge is something which is very specific, right, over there, and there is enough thickness in the product layer which is there, right? So when I say thickness, what I essentially means is that there are a lot of things which you can do, right? But let's suppose, I mean, if it's a product which majorly does say some API testing, etc., right? So you might not have say very large playground, right? Similarly, I think that problem might be sensitized. Is also sensitized to a lot of other developers, where they would be saying that, look, I mean, we also work around say these problems. So it's not say something which is very, very far off, right? But you take the case of say maybe a security, right? In security, I mean, we don't have a lot of people who understand that space. It becomes say something which is rare knowledge, right? In case of finance, again, I think the thing about I think building in say some of these domains is that if you start asking your user, you'll probably build a better version of say QuickBooks or say a Tally, right? But you will not come up with say something which is just very new, right? Similarly, if somebody from the domain starts it, I mean, they might probably build something which would be again very close to say an ERP or say something like this. If somebody very new starts it, I mean, they might build something which would be very close to an API, right? So you need, I think, some persona or say some very specific knowledge, which is a combination of sufficient domain knowledge combined with say something new which is happening, right? And then you see, I think, a very different kind of product which is coming in, right? So I feel, I mean, that knowledge becomes the prime one, and and I think a reflection of that inside the product essentially enables you to get the pricing leverage, right? So, and it just happens that we have very less number of companies which are there, and it goes back to, I think, the earlier thing which you highlighted, that we have just indexed so much on price arbitrage and playing in
certain domains which were successful. So we are just trying to do pattern matching at the ecosystem.
Correct. And the challenge which generally comes over there is that people haven't gone on the journey of a product discovery, right? Where, I mean, you're just trying to create something which never existed, right? It's easier to create something where you have, say, some draft or some initial version, and then you're doing some incremental progress on top of it, right? But if there's nothing, right, I mean, it's a very difficult place to start with, right?
Yeah.
I think that is one. And second, I feel, I mean, since we don't have a lot of those examples, right? So there is still some time before you essentially see those kind of companies, coming in. Because generally, I feel like all of us are, at the end of the day, an aggregation of our life experiences, right? So somehow, I mean, you need a few of those experiences, right, to essentially build that intuition that looks like there's something valuable over here, and then a lot of grit that maybe I should also go and chase this thing after, right? I mean, if we would have probably left it in say 8 months, I mean, there would not have been any reco.
Yeah.
But somehow I think we just chose to keep going on it, right? And luckily, I mean, there was a large value pool which existed right over there.
No, thank you so much, Saurya. It's been an amazing learning from you today.
Oh no, I think, I mean, I should be thankful, because I think some of these stories should come out a lot more in the ecosystem because you never know when somebody who's going through this journey, and if they pick up some bits and pieces out of these things, and if it inspires them to still keep moving on their journey, I feel, I mean, you just feel a lot more fulfilled.
It's been an amazing conversation. Thank you so much again.
Thanks, Ed.